There's this one single number in the Australian economy that, believe it or not, quietly shapes your entire financial world. We're talking everything from your mortgage payments to maybe even the price of your morning coffee. It's not always on the front page, but its impact, it's absolutely massive. So, what is it?
No, it's not the ASX 200, and it's not the price of gold. It's something way more fundamental, and it has this ripple effect that touches every single one of us. It's the official cash rate, and right now, it looks like this.
3.60%. That's it. That's the official cash rate from the Reserve Bank of Australia as of late 2025. Now, I know it might seem like a small number, but this single percentage is pretty much the bedrock of our entire financial system. So let's get into what it actually is.
Okay, so what on earth is the cash rate? Let's break it down. Make it simple.
The easiest way to think about the cash rate is to see it as the wholesale price of money. Seriously. It's the interest rate banks charge each other for these little overnight loans they use to balance their books every day. The RBA sets the target for this rate, and that number becomes the starting point, the benchmark for pretty much every other interest rate out there. So when this number moves, you can bet everything else is going to follow.
Right, so this 3.60% figure, it didn't just appear out of nowhere. It's actually just the latest stop on a journey the RBA has been on all year long. Let's have a look at the path it took to get us here.
So check this out. We started 2025 with the cash rate at 4.35%. Then, come February, the RBA made its first move, cutting it down to 4.10%. And then, boom, another pretty big drop in August, which brings us to where we are today, at 3.60%. The trend here is super clear. The RBA has been easing rates all year.
But here's where it all gets a bit more personal. Because the RBA's cash rate is that wholesale price, remember. But what's the retail price? What's the rate you actually pay on your home loan? Well, the difference might surprise you.
So while the official rate sits at 3.60%, a typical home loan for a new owner-occupier is actually floating around 5.75%. That's a gap of more than 2 whole percentage points. So you got to ask, where does all that extra money go?
And here's that gap in visual form. See that? That space between the RBA's rate and what a homeowner pays, that's where the business of banking really happens. So why does this gap even exist?
Well, it's because the commercial lenders, your bank, they add their own costs and their profit margin on top of the RBA's rate. They've got business costs to run, and they have to assess the risk for every single loan. It really is as simple as this. If the RBA's cash rate is the wholesale price of money, the rate you pay is the final retail price you see on the sticker.
All right, so we've seen the RBA cutting that wholesale cost of money all year, and we know why the retail price we all pay is always going to be higher. This all brings us to the big flashing question.
After a full year of the RBA cutting rates, trying to get the economy moving, the big question on everyone's mind is, have we finally hit the bottom? Will rates just hold steady for a while, or could they start to climb again? Honestly, the answer to that is going to shape Australia's financial landscape for years to come.